Hey everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing News, and I thought we'd jump right in with Canoe.
Oh,
There's a joke there, Canoe. Jump right in.
jump right in the Canoe. So if you don't remember, the EV startup Canoe is one of a group of startup EV companies that SPAC'd in 2020.
Yeah, in December of that year, Canoe listed on NASDAQ under the GOEV ticker symbol. And, well, the stock chart tells the tale. It went public with a valuation of $2.4 billion, a lot of exuberance, a lot of excited people, and now has a current market cap of around $320 million. That's a drop of about 86%.
And what's happened with Canoe is kind of indicative of what's happened with a bunch of these EV startups like Lordstown, Nikola, Lucid, Rivian, Arrival, Arcimoto, and Faraday Future.
Yeah, they went public when the market was just exuberant about all things EVs. And then remember also that money was cheap back then.
They got used to burning cash at way too fast a rate and acted like there would always be more financing rounds to get them out of trouble.
And they all encountered production hell, like Elon has described. So Canoe ended last year with only $36.6 million in the bank. And if that sounds like a lot, because I know if I opened up my bank account and found $36 million, I'd be like, woohoo! Keep in mind that Canoe burned through $487.7 million in 2022.
But you titled this story, Canoe Stays Afloat, here in the script.
Well, yeah, because the news out this week is that Canoe's chairman and CEO, Tony Aquila, has signed a long-term lease with AFV Partners to use 500,000 square feet of its vehicle manufacturing facility in Oklahoma City, Oklahoma, to build Canoe's LDV, their lifestyle delivery vehicles.
Wasn't Canoe already building a plant in Oklahoma?
Yeah. So Canoe started building a plant about 150 miles away in Pryor, Oklahoma, and they were slated to get $300 million in state grants. But Canoe missed their construction deadlines, and so the state negated $10 million in those grants. So basically, the early checks did not go out. And they'll be losing more if they miss more targets. And the problem is, once you start missing the checks from the first targets, you don't have money to pay your construction people, so you start missing more targets, is my guess.
So Canoe is going to move into an already built facility, the AFV Partners plant in Oklahoma City.
Right. In fact, Tony Aquila is the chairman and CEO of AFV Partners. So that's probably how that came to be.
But I mean, with only $36 million in cash, isn't Canoe going to run out of runway in like 8 minutes?
Yeah, right. Because I mean, that was the end of December,
right.
And we're 3 months in. Well, Canoe's CFO, Ken Magnet, said Canoe is exploring a number of diversified funding sources. And he says that now Canoe can file for the Department of Energy's loan program now that the SEC investigation has been resolved.
Oh, right, because Canoe paid a $1.5 million fine to settle with the SEC, which had been investigating Canoe ever since they SPAC'd.
Right. So that's behind them. But so are things like, do you remember that press release Canoe put out a while back where they were delivering an LDV to the U.S. Army in Q4? Well, they did deliver it, and they got paid $67,600.
But I mean, it seemed like a big story at the time because Canoe gets U.S. Army contract.
Yeah, for one demonstration vehicle. I mean, that's the problem with headlines. Canoe puts out the press release, and this isn't only them. A lot of these companies do that. The press is desperate for stuff to just get eyeballs, so they just kind of repackage the press release. Canoe gets Army contract. It was for one vehicle. And to be fair, if the Army likes it, they might want to buy more. But Canoe hasn't even gotten to the hard part yet, in my opinion, which is mass production.
And they're basically out of money.
It seems so. Now, disclaimer, I hold stock in Canoe so that I can better inform our Now You Know Investor Club. And you might be like, Zach, why would you buy stock in a company that you think is crap? It's so that I can watch it on a closer basis, because honestly, if I didn't own stock in it, I might not stay as connected to all the ins and outs. Owning stock in a company means that you usually pay a little more attention to it. So that's one of the benefits that we do for you guys is when all of those companies were SPACing, we bought a lot of that stock to follow it. Not a lot of money in it, but just so that I could stay attention. You can join us over on our Patreon, and that's where we talk to our investor club every week with bonus stories. We're going to have live streams, for instance, with Monogram coming up soon, so that you can find out both about things you want to invest in and maybe things that don't sound so good. It's not all about just like giving you stock tips. But I'm not that hopeful that Canoe is going to be able to survive much longer.
Right. I mean, clearly they have some pretty good marketing. Because, like the Army story sounded great when that first came out. I was like, oh, wow, well, they're just going to make Army vehicles and that'll save them. And they got paid, $67,000.
Well, that's the thing. They've come out with the Walmart story, right? And look, Walmart, smart deal for Walmart.
Mm-hmm.
Sign up to buy a bunch of these vehicles if and when they can produce them at a certain cost. That's deep in the contract that you don't hear about. and it sounds good to the public. Whoa, Canoo is going to sell to Walmart.
And also, Walmart, good job.
Right.
EVs, that's great.
What we don't understand, most of us investors, is that Walmart and other big companies are signing deals like this all the time. And they're just to get their fingers into something. And if it works, great. If it doesn't, nothing happens.
It didn't even really cost them anything.
No. And so here, same thing. Like, it is good marketing. It's smart for Canoo to be putting out positive stories, but it all comes down to the scaled production. And I don't see how they're going to be able to scale the production of this, first of all. I don't even know if this product is really that great a product yet because we haven't gotten our hands on it. And the last point I want to make is this comment by their CFO about, well, now we can get Department of Energy loan program funding. Did you know that Arcimoto was trying to get that funding for years? It is not an easy process. It is not like, oh, okay, fill out the one-page loan application. I'd like my money, please. It takes months. And
isn't it a reimbursement program?
Well, there's a bunch of programs. I think the one they're talking about is just a loan. And again, how's that going to help them? I mean, they're going to have to pay it back. A lot of these companies are just so desperate to keep the cash coming in to keep, being able to do anything. And I got to tell you, when you're down to $36 million in cash, and like we said, they're probably down to fumes now, you're just laying off people. The morale goes down. I just don't see how they're going to keep going. And plus, I mean, look at their stock price again.
Right.
At that price, NASDAQ is going to kick them off the exchange soon. So they're going to have to do a reverse split. And then everyone's going to, it's just, it's sad. And it doesn't mean EVs are bad. It just means that it's harder than it looks.
I wonder if they had taken a different approach. Take the exact same vehicle, take a lot of the exact same points. Maybe don't start off as being like, we're going to make a subscription service autonomous EV, because I don't think that was, I'm glad that they pivoted early on that. But I mean, if they hadn't SPAC'd with a $2.4 billion valuation, if they hadn't done that, then we wouldn't be seeing this go down.
This is the problem with SPACs. Getting all that money before you've actually proven that you can make money is just a stupid idea.
Right, because then you're going to start burning through all that money.
Right. All
the exuberance that you made during the SPAC, like, this is amazing, we're going to do it. It doesn't turn out, because, of course, it's not going to turn out for years to come.
Right.
And then you mix this in with all these other SPACs that are all failing at the same time.
Right.
And that's, I think, what amplifies this. I mean, now, would it be a successful company had they done it kind of a more traditional way? I don't know. I don't feel like it.
Well, and the other thing is this company's pivoted so many times. And I it is funny. Companies like Nokia, like one of their first products was toilet paper. It is true that a lot of companies pivot. They just didn't get the product right in the beginning. Canoo was first going to do an autonomous vehicle, which is great. I think you should do that. But as you're seeing, it's not easy.
And it's not cheap.
And it's not cheap. So this idea that just like with a small team, you can make an autonomous vehicle, that wasn't going to work. So they had to pivot. They pivoted to, the LDV. They've also made this cool pickup truck. They've also made a food truck, like lots of cool kind of
stuff, but I feel like they're all distractions.
Exactly. And you got to pick one and you got to focus on it, and you got to make it at extremely low cost, and that's really, really hard.
Yeah. And I mean, it really shows how important manufacturing is over design. Design, it's important, but not merely in the same way.
Well, and you have to design for manufacturing.
Yeah.
Look, like for instance, when you make something beautiful, like let's say you love the LDV or you love their pickup truck, that's great. But can it be produced cheaply? And they talked a lot about like, 3D printing. That is not cheap. And it's not really hit its prime yet.
Yeah.
So there was a lot of, I think it sounded good to investors who didn't really know a lot about it.
And I mean, this comes back down to the designer effect, where they and companies do this all the time. All sorts of different designers. They come out and they talk about the design, and they show a guy with a pencil, like drawing their thing for the umpteenth time, and they're just like, this design is just amazing. And it's like, doesn't matter. And then they're like, and the materials, and they have like a guy, and he pulls the fabric off of the roll, and he's like playing with it, and you're like, oh wow, materials.
I want to talk about materials. When we did get to see some of these prototypes on video, the materials look really flimsy. A lot of the features on like the pickup truck look like they wouldn't last. And on the food truck has to be built like a tank.
I know.
So again, it's a lot of showmanship, and I think they're really high in that rating. I think Tony's good at that. I just don't think he's going to be able to pull this out. That's just my, disclaimer. I'm not a financial advisor. Don't take my word for whether you should invest or not invest in a company. I'm just trying to give you kind of the feeling of, look, we're big EV fans here, but it's really hard to compete against the big elephant in the room, which now is Tesla.
Thank you so much for joining us on Disruptive Investing News. We'll see you next week. Disruptive Investing.
Disruption!